Growth stock or dividend stock? Which one is better for you? Are you looking for long-term wealth or you're looking for passive income? Today, I'm going to be breaking down the key difference between a growth stock and a dividend stock, and which one would you like to invest in? So let's dive in. So for a growth stock, these are companies that prioritize reinvesting their capital into the business for the business to grow. But for a dividend paying stock, these are companies that prioritize paying out their profits to their investors. So if you have a dividend paying shares, it means you're going to be getting dividend paid to you regularly from this type of companies. So let's talk about the growth stock first. What are the characteristics of a growth stock? The first characteristics you're going to be looking at, it's high potential for your capital to actually appreciate. So when you invest in a growth stock, the tendency for your capital to appreciate, which is the price of the stock, is high. That is because these companies tend to reinvest all their capital back into the company for the company to grow. And as the company continues to grow, the shares price will continue to grow. And that means your capital is actually appreciating. Then there is little to no dividends. For these growth companies, most of them do not pay out dividends, and you get it compensated because your capital is actually appreciated. And there's higher risk and volatility. So when you look at a growth company, just because they're reinvesting their profit back into this company, it means most of them are either new startups, they've not been around for a while, and they're trying to grow this business. So because they've not been around for a while, there's tendency for their capital to actually be eroded or for your capital to be lost in the market. It is highly volatile when you invest in this type of company. And it is very good if you're considering investing in a growth company. That means you're looking at a long-term investment, and you're somebody that likes to take high risk. So what are some examples of companies in this bucket, in this category? That is where you tend to see the times of the tech companies, maybe the Amazon, the Google, and others AI companies. Most of them are startups. You look at innovative startups as well. Maybe they are into fintech and the likes. Then you look at companies that are in the high growth sectors. When you look at the companies that are in the renewable energy sectors, those are the companies that are in this type of category. So when you're trying to buy shares, if you look at the fund file document, if you do not see a column for yield, it means this is a growth company, which means they are most likely not going to be paying out shares, not going to be paying out dividend rather. It doesn't mean it cannot change in the future. It can, but based on the fund file documents you're looking at right now, they are not going to be paying dividend. So what is the downside for this type of shares? Like I mentioned, it's high risk, it's highly volatile. It's possible that the price of the company would fluctuate in the market. And if there's a market downtime, it's possible that you might lose all your capital or you might lose your money. Then there's no regular passive income. So if you're looking for passive income, then this might not be the portfolio for you, because they do not pay out dividends. And most of them that even pay out dividends, they pay out very low dividends. And the stock price might drop in the time of economic downtime. So no stock price is guaranteed. But this one, because there's high risk in it, so the stock price might drop. And even if you're investing in a startup, it's possible that this company might not last for a while. So it's possible that you lose your capital. So these are the downside for this type of investment. Now let's talk about dividend paying investment. So dividend paying stocks, these are companies that actually prioritize paying out their profits to their shareholders. So what it means is when you have a share in this type of company, you're going to be receiving payments from them in terms of passive income. So what is the characteristics of this type of shares? It's you receive passive income. Some pay out quarterly, some pay out monthly, but something comes to you passively on a monthly basis or quarterly basis, and they pay it out regularly. and there is low volatility. These companies that categorize themselves as dividend paying companies, they've been around for a while. So they are not trying to grow into the market again, unlike growth companies. So it is the risk is low. Your capital might not appreciate as when you invest in a growth company, but the risk is very low. And they are companies, they are blue chip companies, they are more stable companies. They've been around for a while, so they are matured companies, and it's good for somebody that is looking for an investor that is looking for passive income, or you're just starting in the market and you do not want to take the risk. Maybe you're a conservative investor, then you might be looking at going for a dividend paying stock. So what are some examples of companies in this category? This is where you see the blue chip companies like the Coca-Colas, the Johnson and Johnson, and companies in that category. You see some utility companies in this bucket as well, and you see the real estate investment trust companies are in this bucket as well. The real estate investment trust companies, they are the companies that invest in real estate. So they might be a company might say, okay, I'm going to be investing in residential apartments. And if you invest in the type, buy a share for this type of company, at the end of the month, at the end of the quarter, they are mandated to actually pay out profits to their shareholders. And you have the dividend aristocrats. So these dividend aristocrats, they are companies that have been around for a while, and they've been paying dividends consistently for over 25 years. So most of these dividend aristocrats, they tend to pay out dividends yearly for 25 years, and they want to maintain that status, right? Like they want to maintain the status of dividend aristocrats. So they keep paying out dividends, and most of them keep increasing their dividends on a yearly basis. So what is the downside for dividend paying shares? So the price for your shares tend to grow slower compared to when you invest in a growth company. And that is because they're going to be paying out most of their profits to their shareholders anyway. So the price for the shares tend not to appreciate as much as a growth company. Then dividend payout is not guaranteed. So if the company is not doing well, there's tendency for them to actually reduce the yield you're going to be getting on your dividend payments, or you might not even get dividend payment paid to you at all. But you just need to do your research before you're so sure. Then there's tax implication on the dividend that is being paid to you as well. For different companies, for different countries, there are different tax implications on dividend that are being paid out to you. So now we now know the difference. We now know the key characteristics of a dividend paying shares and the growth shares. So what do you currently have in your portfolio? If you're looking at what is best for me, so let's now look at what is best for you. Is you're a very conservative investor, you're looking for passive income, you do not really understand the market, then you might be tending towards getting a dividend paying shares, because just like I mentioned, they pay you out dividends. It's low risk because they've been around for a while or the likes. But if you're a very aggressive investor, you're looking for wealth appreciation, and you're investing for a long term, then you might be looking at going for a growth stock. So these are the things you need to check, and you need to also review the fund fact document for each of those companies so that you're sure of what you're actually investing in. So is it that you've not started your investment journey, or you are already investing, but you do not even know if you're investing in growth stock or you're investing in dividend paying stock? I'm going to be having a class on the 29th of March. I have this class on a monthly basis. So if you're seeing this video after the 29th of March, you might want to take a look at the link to see when the next class will be coming up. What I teach basically in this class is how you can start investing, building your passive income using dividend shares. And in this class, we're going to be breaking it down, how you can locate the shares, how you can differentiate if it's a dividend paying shares or if it's a growth shares. But however, now that you've watched this video, what do you currently have in your portfolio? Let's discuss. It is good to have a mixture of both the growth shares and the dividend paying shares. However, what do you currently have in your portfolio? And if you've not started your journey, how do you intend to balance your portfolio between a growth shares and a dividend paying shares. Till I come your way next time, remain blessed and God bless you.